So, good evening, everyone. We are starting the class now. So today our topic is basic market structure. We are to discuss on basic market structure and basic market structure. Market structure simply. Let me just. Oh God. Market structure is simply. Let me just type it down. Market structure. Please stop writing on my this thing. These people joining, they are disturbing the class. So market structure is used to know the direction of the market, whether the market is bullish or bearish. And the only two things that happen in markets when you come to the chart is either you are buying or you are selling. Is either the market is going up or the market is going down. So you just follow what you see on the chart. You don't just say you come to the chart to start buying. It's either you follow the people that are buying or you follow the people that are selling. And if you are going against them, you encounter loss. And what you need to know is when to buy and when to sell. That's where market structure comes in. You understand? Is where you need to buy or where you need to sell. That's where market structure comes in. And for market structure, when it comes to markets, when you look at your charts, you probably be saying something like this. Let's say you come to your charts, start saying things like this, start saying this, price behaving like this. You start saying series of breakout to the upside, this, or depending on what the market is doing at the moment, is either you see something like this or you see something like this. You come to your chart, you start saying things like this. So when you see something like this, you decide on where to follow. Understand? If you are going against where the market is going, you surely take losses. But if you are following what the market is doing, you will not you avoid losses. You understand? But if let's say market you came to the chart, you saw something like this, you saw something like this, then you start saying you want to buy immediately. You say price started buying from here. You say you want to buy. Immediately price reverse and take you out. That means you are going against what the market is doing. I'm saying that's if you are using a higher time frame. Understand? Not a lower time frame. So the moment you start seeing price giving you this type of movement, we call this one an uptrend. And when you see price doing something like this series of lows and highs like this to the downside, you call that a downtrend. So to the newbies, I know you may not know things like higher highs, higher low, higher highs, higher low, lower high, lower low, lower high, lower low. So in this on this chart right now, what you see, this place you will call this place your um is this higher low? Yeah, this is higher low, and this place is your higher high. You understand? For the newbies, this is for the newbies. I know a lot of you may already know about this. I'm just trying to recap this for you for the newbies. This next place is your higher high. This is the higher low, higher high, higher low, higher high, higher low, higher high. You can't call this place higher high. Let's say, um, let me show you something now. Let's say market is doing something like this. Market was coming like this, give you something like this, reverse back. You can't call this place higher high until price broke above it. If this one didn't go above this place, you cannot call this place higher high yet until price did what, do what break above this place. That's when you can now say, okay, this the new higher high. This was the old higher high. It was after price broke above this place that you call this place higher high. Then this one will become the new higher high. But you will not consider it as higher high yet until price reverse back to the higher low zone, then start buying again, then breaking above this place. What's this one? Who is requesting for this one? Please don't distract the class, please. I don't know what you are requesting for. So I was trying to explain something before. So to the newbies, this place is your higher high, this is your higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And I was saying that you cannot consider a place like this higher high until this price, this let's say price was there at the moment. You cannot consider this place higher high yet until this place, this one that was coming until this one that is coming break above it. Now you can now say, okay, this was the higher high. You understand? And for this part also, this is your is it lower high? Yeah, this is lower high. This is lower high. Then this is your lower low. I'm just writing it like this, so I don't want to start typing for long something. This is lower high, lower low, lower high, lower low, lower high, lower low. That means when you start seeing series of lower high, lower low, and price breaking down, breaking below the previous lower low, it means that price is bearish. When the market is buying, you call it a bullish market. You may be hearing a lot of things like bullish, bearish, uptrend, downtrend. Your own is just to know that okay, market is buying, market is selling. You don't need to start putting all this name or this thing in your head. Just know what you are doing. If you can come to the chart and identify what's on the chart, that's all for you. You don't need to start putting the name on your head. You don't need to say, okay, this place higher, low, but you just know that you just have to identify what you are seeing on the chart. It's not everything like um you don't have to say, okay, this one have a special name. You can give it the name you like, you understand? You can give it the name you like, but you just have to know it. The thing is that it's not every name that it's not everything that I mentioned in the class that you have to put on your head, like the names of all these things. You don't need to put all of them to your head. And in a bullish market like this now, let's say you have something like this. This is just for the basic market structure. This is not for the advanced market structure. The basic market structure we is just all about highs and low, highs and low, highs and low. When we get to the advanced market structure, that's where you start like looking for where you spot liquidity or those other stuff. Like in this basic market structure now, the when price is going up like this, let's say you have this and price broke above it now, then the next zone you wait for price to reverse to like 50% zone around this place before you start looking for buy. Understand? You cannot say you start buying when the price is around this place. You measure from here to this place. You measure from here to this place. That's where your Fibonacci will be working for you. That's why I said you need Fibonacci. In the setting up of the trading view yesterday, I told you that we need Fibonacci. You understand? So I show you everything. You can watch the video again on YouTube, so you can set up your own trading view. So in the basic market structure, the things that we're taught is that when price is buying, you always wait for price to reverse back to like 50%. You understand? 50%. around this place before you continue, you follow them, the people that are buying. Understand? The same thing again. When price is buying, you measure the current trend, you understand, from year to year. So you wait for price to do what? To reverse back to your 50% again before you follow the people that are buying, you follow the buyers. Then you understand just something like this, not something that is that this is basic market structure. But in the advanced market structure, is a different thing, you understand? In the advanced market structure, you know you look for where liquidity is, you look for a lot of things, but that's the main way to trade. But using the basic market structure also, you can make profit from the market, but it's not as complete as that of the um advanced market structure. Understand? It's not as complete. Same thing for the sell side. When people are selling, you will not want to buy. Let's say price is doing something like this. Price was after this break of structure to the downside, you want to do what? You want to wait for price to reverse to around 50% of the zone. Then you follow the people that are selling. Understand? Something like this. You take your Fibonacci. The Fibonacci is useful. You understand? It's useful. Understand? Something like this. This is the basic market structure. You also measure again from this region where price before from this place where price starts selling, then till where you start seeing pullback. That's where you stop the measurements. You just measure, you say, okay, you wait for price to get to around 50% again of this place before you start selling. Understand? That's what the basic market structure is mostly all about. It's not something that is that hard. And also in the basic market structure, we have three type of basic market structure. We have the swing, and we have the sub, and we have the minor structure. We have the swing structure, we have the substructure, and we have the minor structure. Who is right now on my screen? Please stop writing on the screen now. There was a way someone taught me how to erase all this thing yesterday. I take teach me that thing. I need to learn how to use this laptop very well. I'm not used to it. That's why I just started using laptops recently. I was so used to phone. So let me try to delete this so I can explain that one. But for the newbies, let me just try to show you the chart example first. Let me show you chart example of the basic market structure that I was trying to explain. Let me use GBP USD. I think that will be better. GBP USD. I was seeing a good price action on GBP USD. That's why I'm trying to um use GBP USD. I saw what is all this? Okay, this is GBP USD. Where is the chat? Okay, I was hiding the chat before. Sorry. Okay. What you can see here is simply what I was trying to explain to you in the basic market structure, where I was saying when people are selling, you follow them to sell. When they are buying, you follow them to buy. Looking at this now, you can see that market was trying to buy before, was buying before. You understand? It was buying before. Then this is 30-minute time frame. But when you want to mark the main break of structure, you need to use like 4 hours and 1 hour to mark the main swing structure. But I will explain that when we get to that. But for just letting you know that know about basic market structure, I just want to show you where break of structure are, where higher highs, higher low, higher highs, higher lows there. You understand? So looking at this now, when price was buying, price gave this reversal. This is a good reversal when you have three candle closing above themselves, like three bullish candle closing above themselves. We have one, two, three closing above themselves. It's a good reversal. So we can call this place our new, what's it called? Higher low. Then this is it higher low, lower high, sorry, lower high. That's why I say you don't need to cram all those things on you. You just know what you are seeing on the chart. You don't need to cram all those names. So this place now is the is the former lower low. You understand? But you have to wait for price to do or to break below this before you can call this place a lower low. Now this price was selling, then it gave us a pullback. We can call this place a lower low, but not yet confirmed unless price reverse again and breaking below it. Now you can now say this place now is the um lower high. Where's my test? You can call this place your lower high now. Now you know that this place is a protected area now. Then this place now has now been confirmed to be your lower low. In the last class, I was talking about break of structure. This like this place when price started selling and it started taking out, maybe closing below the previous lower low, you can call that break of structure. When price break this place, this break of structure, then now price started doing what again? Reversing. I don't want to talk about liquidity yet. We are not yet we are not yet in the class for that. I just want to show you lower high, lower low, and higher highs, higher low. So now what you can spot here is that you have your lower low here, you have lower high, you have another lower low, you have a lower high. Understand? Then you have another lower low, you have lower high, you have another lower low. What are you supposed to do? You use your Fibonacci to mark the 50%. What was that saying? So we are waiting for price to do what, to break below this. But according to advanced market structure, price will take out price may take out these two first. This place. Price may come to around this place before it will crash, according to advanced market structure. But using basic market structure, you will have already made enough profit from this place or this one that is happening. Understand? But according to advanced market structure, the way we trade, we wait for price to take out these two, or this one liquidity. The price comes around this place, then price will start crashing again. Please, who is this one writing now? Please stop writing. So the use of the Fibonacci that was explaining yesterday, if you like measure, what was I trying to measure from this place to this place, you see that this place is within the 50% region. If you also measure from here again, from this place to this place, you see that this pullback is up to the 50%. This is just basic market structure. With this one also you can make profits with this alone you can make profit, but you need to learn more. You understand? You need to advance in trading. You can see this one also. You make profit from it, but you just need to know where to start selling from within that 50% region. You need to know where you are selling from. That's where POI come in. But we'll get to that. We are not yet there. I just want to show you what you need to know in the basic market structure. You can see price was buying, buying, buying. Price was buying, but there was no reversal until it gets to around 50% region. I was buying this GPUSD today, but when price gets to around this place, I know that it will reverse, so I just close around this place. Immediately go to this place. I was seeing reversal. I was seeing something that will make it reverse, so I just closed because I knew there was a POI here. I knew there was a POI here. So when we get to POI also, you learn that. But for now, just know this basic market structure. Just be able to spot where your breakup structure is, where your this lower low, lower high. Ah, this will join in early, please. Next time, lower high, lower low, lower high. Then this is another lower low. No, 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 this is the new lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then another lower high is trying to create. But I don't think this one will come and break this yet. It may reverse to, let's say, around this region, maybe this fair value gap around this place, may reverse to this fair value gap, or because of this fair value block around this place, then to buy, taking out these two first, then to start selling. That's what I'm saying. That's what may happen. It's not that I'm the one controlling the market. It may happen that way. When price get to my zone and it didn't give me confirmation, I will not take it. But if you get to this place and it give me confirmation to buy again, I'll follow the buy till I get to the place I want to sell around this place. Then I'll close my buy, then start selling. You understand? So this place now, so just the basic market structure. If you understand the basic, some people they only trade the basic market structure and they are profitable. This place is called your breakup structure. This breakup structure to the downside. You understand? This BOS. I explained that in the class yesterday. I just typed the meaning, but I didn't emphasize more on it. So that's breakup structure. So I can delete this, right? All this drawing here. So this is your lower high, lower low, lower high, lower low. Where price reverse back to break this low, this lower low. This one will now become previous lower low. The new one is this one until price reverse back, breaking this. So the place where this one stop moving and start reversing back is called your lower. Understand? It's called your lower high. So now let me look for example on for the buy side, which is higher highs and higher low. I want a place where I can get good example, where I can see series of highs. Let me just use like 1 hour time frame. Okay, I've seen something on the starting time frame. Okay, looking at this place also, I'm nothing serious about this. But for example's sake, we can just refer to this for example's sake. This just we can call this place a break of structure. Price reverse back to the 50%, then start buying again to break this structure. Then all this price has already started selling. But before G was buying massively, was buying massively. I closed my trade. I was buying before. If I check it on 4 hours time frame, it's like I still have the analysis, or it's not, if it's not FSCM, it will be on Wanda. Before all this buy that happened, I was buying around this place in May. No, was it in no in February? Was February. I was buying around this place. Then I closed my trade around this place. I thought price was trying to change character here. I thought it was trying to respect this region here. Then I closed my trade. Ever since then, it was for a very long time. And now let me look for example for the higher highs and higher low. Now chart now, looking at this chart, one thing is I've learned a lot of lesson, and I've been trying to improve also. I've been trying to improve, and I've been seeing a lot of improvement. And I thank God for that. It's better to learn from mistake than to just stay in one place and keep doing the same mistakes. So now looking at this, you can say from year to year, using your Fibonacci. You can see this is where price broke the structure. We have price coming from this place, reverse back to around this place. You can this is where price starts changing character for from the sell trend. It was buying, it was selling a long time, but price started changing character around this place. This is where price changing character because we have a good pullback. For buy side, you need to have three candle closing above each other, or you will need to have two candle, but one will be short, then the second will be very long. You understand? So when price is selling, and you want to know where you have a good pullback, where the zone is very strong, you need to have one, two, three candle closing above each other. Even though there are four, it's still good. Understand? But you need to have at least three following each other. Like this, now price was giving us good pullback. Then immediately price reverse, giving us another one for showing indicating to us that price wanted to change character. Then it gave us one, two, three. Understand? Then assuming price keep coming down, maybe after this one, two, three pullback here, assuming price did something like pull back a little bit, then reverse back to break below this, we'll have known that okay, price is still bearish. But what price did was that price pulled back or breaking above this place. Now price has already changed character here, telling us that okay, this place from all this place now, price has already changed character here. We say okay, price has changed to buying. So what do you need to do now? You need to look carry your Fibonacci. You measure from here to this place. You wait for 50% reversal, which is what happened here. Price reverse back into this 50% around this place. Then price started doing what? It will be very bad if it goes up. So now looking at this now, you can see price has changed character here. What do you need to look for now? Series of break of structure. Understand? You need to start looking for break of structure to the upside. Now, after this first change of character, price reverse back to the 50%. Then you measure um from this place to this place to look for where another reversal may occur. Now, if after measuring it from year to year, you have price reverse back to the 50%. Immediately, then you start buying. Then you have another break of structure here. Understand? After that, but I was saying that you need to have three what's it called, three candle following each other before you can call it pullback. But in the advanced market structure, there are some places where you you still have three candle pulling back, but there are still liquidity. But when we get to that place, that's where you understand that. But for now, you just follow the advanced market basic market structure to get some things for tonight. That's the reason why price, after all this thing, price still reverse take out this place. But that one will be in the advanced market structure. Now, looking at this also now, you have price doing what? After this, it broke the structure to the upside. It did what? Reverse back to the 50%, then continue buying. You can see that it touched the 50%. This Fibonacci, if you there's a way they used to call it. Is it PED, premium equilibrium, then discounts? Yeah, something like that. Premium, this place premium zone, the middle is the equilibrium, then this place is discount region, something like that. I don't know how I will say it, but that's just the way they put it. So if you are buying, you wait for price to reverse back to the discount zone before you buy. If you are selling, you wait for price to reverse back to the premium zone before selling. I think that's the explanation for it. I think that's the explanation for it. But you don't need to know the name. Just know what you are doing. Understand? Because as I was explaining to you here, I wasn't saying the name before. I was just telling you that you need for price to reverse back to this place. You need for price to reverse back to this place. You understand? So price continue buying, but due to the advanced market structure, that's what made this one happen here. But when you get to the advanced market structure, you learn all that, then you'll be good to go. Now we have another place where price broke structure to the upside, reverse back. So you measure from year to year. This is your zone. You measure from year to year. price reverse back to the 50%, then buy. So that's just the main thing for the basic market structure. But I'll also talk about um, how the basic market structure are into three places. We have the swing in the basic market in market structure. Generally, we have swing swing structure. We have the substructure, and we have the minor structure also. Now, these three now you need to understand them very well. You need to understand them very well. That's when you need your higher time frame when you are doing analysis. On the lower time frame in this place, we saw a lot of things, a lot of break of structure to the upside. But when you come to the higher time frame, this 4 hour time frame, before on the 30-minute time frame, we're seeing series of lower high, lower low, lower high. You understand? But on the higher time frame, this is just the lower high, this lower low. You understand? Then this new lower low, then price reversing back to that upside. You understand? Who is this one now? Please don't write on this screen now. Let's just do this class and enjoy it. Let everybody enjoy it now. Let me just put it again. On the 30-minute time frame before, we're seeing a lot of lower high, lower high, lower low, lower high, lower lows. You see a series of lower high, lower and low. Understand? But if you go to the 4 hours time frame, what are you saying? You just have what? Lower low here, lower high here. Then this is the new lower low. That was why I was saying price will have to reverse back to around this place before it starts selling. Understand? If you measure your Fibonacci now from this up here to this place, I know price is already touching it, but I think price will still sell buy deep to the upside. It will buy deep to the upside before it continue the direction, because I think price has already changed character for this GPUSD on the higher time frame. So what we need now is to look for more sales. You understand? What we need now is to look for more sell, more reason to sell. Understand? But on the lower time frame, we're seeing series of lower high, lower low, lower high around this place. You understand? Which will mark, and it was looking very simple. You understand? It was looking very simple. But on the higher time frame, on the 4 hours time frame, you know that when I just put it on the 4 hour time frame, you can see that it's just showing us this place to be lower low, then lower high, lower low. Then we are looking for a new lower high before price continue giving us another new lower low. Now this place now is where you can say this is your support. This new lower low here is your support region. Then you are waiting for price to do what? To buy to the upside a little bit, then come down, take out this place. Then this place become your new lower low. Then when price start reversing, maybe price start doing something like this. That's where you start knowing that this place is your pullback region. When price start doing things like this, understand, that's where you start noticing where your pullback is. Then you use your Fibonacci to do what? To measure it for when price start pulling back. Understand? You use your Fibonacci to measure it. Then when price get to the 50%, if you don't have any good POI, you will not enter. You wait for where you mark your POI. If price gets to where your POI is at, then you wait for confirmation. Who is this one writing on my screen now? Please now, who is Vincent? So you wait for what? You wait for price to reverse back to like 50% region, which this place is now the premium. When you are selling this premium, this discount, this is the equilibrium. Price will reverse to 50%. Anywhere you mark your POI, wait for confirmation before you take your trade. You understand? It's just simple. It's not that it's that hard. It's not that hard. So I was talking about swing, minor structure, and the substructure. Now, one thing about swing structure, from this place, let me put it on the 30-minute time frame. On the 4 hours time frame, we already know where the swing structure is at. Now, looking at this whole chart here, we know price was selling. You understand? Price was selling, and it was giving us series of before price broke. Price hasn't broken out of this place. But we already see a change of character around this place. But now, looking at this whole chart now, what you who is this one now? Who is writing all this now on my chart? Looking at this whole place now, the if you want to mark your swing structure, your swing is from this place. Your swing structure is from this place to this place. This is your swing. This is your latest swing structure. Now, anything that if, if you want to look for selling now, if you want to look for selling, you will measure it from this place to this place before you start selling. Until price gets into this 50% zone before you start selling. Any other thing that is happening within this place, just anything that is happening within all this place is just what this anything that is happening within all this place, this substructure. Anything that is happening within all this place, you call this one substructure. All this thing that was happening, that we're buying and selling, all this thing that was happening is called substructure. But from this place to this place is your swing structure. For this one, from this place to this place is your swing structure. Understand? From this place to this place is your swing structure. Let me mark this one also, so you just get what I'm saying. From here to this place is your swing structure. Year to year is your swing structure. So if you take your Fibonacci to now to mark now, you know that price reverse back to the 50% zone before it starts selling, which is this. You can see that price pull back up to this place before it starts selling. And anything that is happening within all this place, you call these ones your substructure. But from year to year is your swing structure. Any sell or buy you are doing within this place is substructure. Now, where is your minor structure? Your minor structure is this place, from this place to where price broke want to break this place is your minor structure. From here to this place is your minor structure for this one. Understand? From here, all this place is your minor structure. But you don't need that. What you just need is just to know where your swing structure is. Know where your swing structure is, and know where you have series of break of structure to the downside or break of structure to the upside. Understand? This Wi-Fi. You understand what I was saying now? So you just need to be able to know where your swing structure is on the chart whenever you are analyzing. So you will not analyze blindly and lose money. Understand? You need to follow the the whole process so you can get it right. Understand? Looking at it now, the 4 hours time frame. Now, what can you see? You can see that it's looking like it's looking a little bit better on the 4 hours time frame. But on 13 time frame, you catch a lot of opportunity. But on the 4 hours time frame, you just catch it and make your good profit. You aim for the draw on liquidity, you take your profit around this place, you understand? So now looking at this from year to year, your swing structure. Everything that is happening, all this pullback happening within this place is your substructure. Now, this place is your for all this thing that is happening around here, around this place, to get to this place is your minor structure. But you don't need to know the name. You just what you just need is your swing structure. You understand? Is where you see the main break of structure. You understand? That's what you need. You don't need to know the name. Just know where there is main break of structure. Now, looking at this whole chart, this is where you have the main break of structure to the downside. Every other thing that was happening here before, they are not the main break of structure. You understand? Every other thing that was happening within this place, they are not the main break of structure. The main break of structure is the one that happened there. You understand? the main break of structure is what happened here. So that's it. And what else? What else do I need to show you tonight? I don't think there's any other thing that I will show you anymore for the night. You just need to what you do for me. Just use use two different pairs using 30-minute time frame. Mark your higher highs, higher low, lower highs, lower low for me, like two different pairs on two different pairs. Mark higher highs, higher lows, and lower high, lower low. After you watch this video, mark them, send the screenshots to I'll send the group where you send the screenshot to. I'll send the Telegram group where you send the screenshot to. So I will look at the screenshot. Then our next class, I will assess them. I'll look at what you did. If you are doing it right, I will call your attention to it. If you are doing it wrong, I'll call your attention to it so you know what you're doing next time. Understand? So you do the assignments. Then tomorrow in our tomorrow class, I will look at them. I look at them, then I will tell you what to do if you are wrong, and I will also tell you what to do if you are right. Understand? So I'm seeing a lot of messages. Let me pause the stop the recording so the the video will not be too long. I'll upload the video. So I'll just answer questions. I'll stop the recording. Stop recording.